Hi and welcome to another edition of our weekly market outlook report for the week starting Monday, the 6th of April. We have just left behind us a volatile trading week and a busy economic data calendar which kicked off April trading activity. It's a new quarter. We are heading into a slightly quieter week, which starts with OPEC meeting on Monday. On Tuesday, we should be on the lookout for RBA interest rate decision and statement. Going forward on Wednesday, the main points of interest are reserved for the FOMC minutes and crude oil inventories. On Thursday, we should be on the lookout for UK industrial and manufacturing production and GDP for February. And also US weekly jobless claims will be closely watched as well. The week will finish on Friday with China and US consumer price index. Now, let's take a look at few markets. This is Wall Street 30 or the Dow Jones Index intraday 4-hourly price chart, and you can see that Wall Street 30 is still downtrending quite nicely. It's capped by this falling resistance trend line, and it's creating a kind of mixed trading reaction, very strange reaction to US jobless claims and US non-farm payrolls and US unemployment data, which came in on Thursday and Friday of last week. So prior week we had this creation of this rising wedge formation, which broke through the downside, and now we are consolidating sideways here. Looking at the price action going forward, we can see that there's a clearly identified support at 20,840, and there's a clear resistance at 21,500. This will become better when I go into a shorter term time frame. But just from this point of view, bulls are looking for a breakout above this falling resistance trend line, and that's around 21,500 for a potential extension to the upside. In that case, there will be a bullish breakout targeting 22,050, 22,650, 23,000 to the upside. Alternatively, and this is better seen if I go into an hourly and show you how that looks. This is the same price action, just zoomed in a shorter term time frame. This appears to be a double bottom here with a very clearly defined neckline. So there is our neckline here around 21,100 and so on. And as long as that neckline holds as a resistance, we saw the loss of that neckline and now retesting that neckline from underneath, that could open the way for a bearish reaction. And then bearish traders who are looking at this price action, they'll take the distance from this initial leg lower and they would extend it at the breakout of this consolidation pattern for a potential target to the downside, targeting 19,500, 19,300 and so on. Before we get there, this is what I'm looking at the moment. So if we do get this double top breakout to the downside, an extension to the downside, the initial support is yet again at 20,850. Confirmed loss of that level could open the way for the retest of these lows here towards 20,550, 20,600. Loss of that level could open the way for a deeper corrective move towards nice and round number 20,000, and that 20,000 is very, very important because it was tested here on many occasions, either as a support initially and then subsequently as a resistance initially on a number of occasions before the price action actually broke out and moved higher. So price action appears to be bearish, but if we see an end of day breakout above 21,500, that will be negated and changed.